Welcome back to Investing Talk podcast. Today, we're going to be taking a look at Barclays,
Barclays.
ticker symbol BCS,
Okay.
a global financial giant. As you probably know, that's been making some serious moves in the market.
Yeah, they've been on a bit of a roller coaster ride. You know what I mean? Their stock is up over 98% in the past year, which is incredible. But then yesterday it dipped slightly. It's enough to make any investor, wonder what's going on.
Exactly. So today, we're going to break down what's driving Barclays' stock performance, both the good and the maybe not so good. We'll look at the numbers, the recent news, and try to figure out if this is a stock worth keeping an eye on.
It's a fascinating case study for sure. So let's start with that impressive stock performance. A 91.3% return year to date and a 98.18% increase over the past year. Those numbers alone, tell us, the market is feeling pretty confident about Barclays right now.
Yeah, okay, so those returns are definitely eye-catching, but what's actually fueling that kind of growth?
Well, analysts are projecting a 13.73% increase in earnings per share, bumping it from $1.53 to $1.74 in the next year. That kind of earnings growth is a pretty good indicator of a healthy and profitable company. And when a company is making money, investors get interested.
Right, that makes sense. Strong earnings usually attract investors. Is there anything else making Barclays look attractive right now?
Their valuation is also turning heads. Their price-to-earnings ratio, or PE ratio, is sitting at 9.71, which is relatively low compared to other companies in the financial sector. That suggests that the stock might be undervalued, meaning it could be a good deal for investors looking for a bargain.
Undervalued. I like the sound of that. But as you always say, we need to look at the whole picture, right? What else should we consider beyond just the stock price?
Absolutely. Barclays has been making some interesting moves strategically. They're actively pursuing acquisitions and partnerships, especially in the hot areas of fintech and sustainable finance. These are sectors with huge growth potential, and Barclays seems determined to be a major player.
So they're not just sitting on their laurels. They're actively looking for ways to grow and adapt to the changing financial landscape. But even with all this positive momentum, there was that dip in the stock price yesterday. Should investors be worried?
Well, let's put that dip into perspective. On January 22nd, the stock price decreased by 2.82%. While any drop can be a little unnerving, it's important to remember that the market rarely moves in a straight line. Fluctuations are normal even for companies with strong performance like Barclays.
So it's more like a little bump in the road rather than a sign of serious trouble.
Exactly. To really understand if this dip is a red flag or a buying opportunity, we need to dig deeper into what might be causing it. Could be short-term market jitters, or maybe investors are reacting to some recent news.
Speaking of news, what kind of headlines have been swirling around Barclays lately? Anything that could explain that dip or give us hints about their future direction?
There are a few things to note. First, Barclays CEO Venkatekrishnan has been publicly very optimistic about the bank's future, especially with the current regulatory environment. This kind of bullish outlook from a CEO can definitely boost investor confidence.
Okay, so a confident CEO is usually a good sign. But is everyone as optimistic?
Well, there's been some mixed reaction to the news that Barclays is closing its Rise FinTech program. Some see it as a sign that they might be pulling back from their commitment to FinTech innovation, which could be a concern.
So one positive headline and one that's raising some eyebrows. Is there anything else investors should be aware of?
One more thing, Barclays just appointed Paul Johnson as their new head of equities for Asia Pacific. This move signals their interest in expanding their presence in a key growth region, which could be a strategic win.
All right, so we've got a mix of signals here. Strong performance, strategic acquisitions, a confident CEO, but also some concerns about their fintech commitment and that recent stock dip. It's a lot to consider.
It definitely is. And that's where the fun of investing comes in, trying to piece together all these different factors to make informed decisions.
Well, before we get into whether Barclays is a buy, hold, or sell, let's take a closer look at the technical side of things. What can the charts tell us about Barclays' recent performance and potential future movements?
From a technical analysis perspective, we're seeing some interesting patterns. On January 22nd, the stock price fluctuated between $14.64.5 and $14.45.1. That volatility, even within a generally upward trend, suggests there's some uncertainty in the market right now.
So even with those impressive returns, there's still a bit of a question mark hanging over Barclays' future. What about trading volume? Is that giving us any clues?
The trading volume for Barclays has been significantly higher than average lately, which tells us there's a lot of interest in this stock. But increased volume can be caused by both buyers and sellers, so it's not a clear indicator of overall sentiment.
So more people are paying attention to Barclays, but we don't know for sure if they're feeling bullish or bearish. What about the technical indicators? Can they shed some light on the situation?
If we look at the moving averages, Barclays is currently trading above both its 50-day and 200-day moving averages. That's generally considered a bullish signal, suggesting a positive long-term trend.
Okay, so that's encouraging for those thinking long-term. But you mentioned earlier that there are some mixed signals. What else are the indicators telling us?
Well, the Relative Strength Index, or RSI, is currently at 64.5. Oh, this is approaching what's called overbought territory, which means the stock might be getting a bit too hot. It's not a guarantee, but it suggests a price dip could be on the horizon.
So even though the long-term trend looks positive, there might be some short-term turbulence ahead. It's like trying to predict the weather. You can see the sunny skies, but there might be a storm brewing on the horizon.
Exactly. And to add to that, the moving average convergence divergence, or MACD, is showing potential weakening momentum. It's still above zero, which indicates bullish momentum overall, but it's something to keep an eye on.
So we're seeing some mixed signals from the technical indicators. Anything else we should be paying attention to on that front?
The stochastic oscillator is currently in a neutral zone, which doesn't give us a clear buy or sell signal. It basically means the stock could move either way in the near term.
Got it. So from a technical standpoint, it sounds like Barclays is at a bit of a crossroads. The long-term trend looks promising, but there are hints of potential short-term weakness. It's like they're at a fork in the road, and we need to see which path they choose.
That's a great analogy. And that's what makes investing so intriguing. It's not always black and white. There's always an element of uncertainty, and that's what keeps things interesting.
It definitely keeps us on our toes. But hey, that's what we're here for on Investing Talk Podcast, to help listeners navigate these twists and turns and hopefully make some smart investment decisions along the way.
Exactly. And speaking of twists and turns, let's circle back to that dip in Barclays stock price. We've talked about some potential factors, but it's worth noting that the stock has been on a bit of a roller coaster ride over the past few weeks.
Oh, really? So it's not just this one dip that's got people talking.
Right. It hit a new one-year high on January 21st, then dipped the next day on the 22nd. That kind of swing can make investors nervous.
So a peak and then a valley? I can see why people might be hitting the panic button. What do you make of that pattern?
Well, it suggests some uncertainty in the market about Barclays' future direction. Some investors might be cashing in after that high, while others might be hesitant to buy in at these levels. It's like a tug of war between optimism and caution.
That makes sense.
Yeah.
It's almost like the market is saying, we like what we're seeing, but we're not quite sure what to make of it all yet. So what should investors be watching closely in the coming weeks and months? What will give us a clearer picture of where Barclays is headed?
Well, first and foremost, keep an eye on those earnings reports. If Barclays can continue to deliver strong earnings growth, that will be a very positive sign. Earnings are the foundation of a company's value, and consistent profitability is what investors want to see.
Absolutely. Earnings are king. But we've also talked about Barclays' strategic initiatives, especially in those high-growth areas like fintech and sustainable finance. How can investors assess whether those strategies are actually paying off?
It's all about execution. Are they making smart acquisitions? Are they forming the right partnerships? Are they attracting top talent? Investors should look for concrete results that show those strategies are translating into tangible growth.
So it's not enough to just talk the talk. They need to walk the walk. Actions speak louder than words, right?
Exactly. And then, of course, there's the elephant in the room, the broader macroeconomic environment. How will rising interest rates, inflation, and geopolitical tensions impact Barclays' business? These are factors that are largely out of their control, but they will undoubtedly influence their performance.
So it's a bit of a wait-and-see game at this point. We need more data points before we can confidently say whether Barclays is a buy, hold, or sell. It's like watching a movie. We've seen the trailer, but we need to see the whole film before we can give it a proper review.
I like that analogy, and that's why it's so important for investors to stay informed, to do their research, and be prepared to adapt their investment strategies as the story unfolds.
Great advice. Now, before we move on, I want to ask you a question that's been on my mind. We've talked a lot about Barclays' growth potential, but what about their competition? How do they stack up against other global financial giants?
That's a crucial question. Barclays is definitely not operating in a vacuum. They're facing intense competition from other major banks, both in the UK and internationally.
So who are their biggest rivals, and what are Barclays' strengths and weaknesses compared to them?
In the UK, their main competitors are HSBC Holdings, Lloyds Banking Group, and NatWest Group. These are all well-established institutions with extensive branch networks and loyal customer bases.
So Barclays is playing in a big league. How do they differentiate themselves from these heavy hitters? What are their secret weapons?
One advantage for Barclays is their strong global presence with operations in over 40 countries. This wider reach allows them to tap into diverse markets and reduce their reliance on any one region.
That makes sense. A global footprint can be a major asset in the financial world. What else sets Barclays apart?
They also have a relatively strong investment banking division, which has been a key driver of their recent growth. They've been successful in advising on major deals and managing large investment portfolios. That kind of success in the high-stakes world of investment banking definitely turns heads.
So they're making a name for themselves as deal makers and financial strategists. That's impressive. But every superhero has a weakness, right? What are some areas where Barclays might be lagging behind?
One area where they've faced some criticism is their customer service. They haven't always been known for providing the most seamless and personalized experience, especially compared to some of their more digitally focused competitors. In today's world, customer experience is everything, and Barclays needs to step up their game.
That's a good point. I've heard horror stories about bad banking experiences, and I'm sure I'm not alone.
Okay.
So improving their customer service should be a top priority for Barclays. Are they doing anything to address that?
To be fair, they have been investing in digital transformation efforts to enhance their customer experience, but they still have some catching up to do.
It sounds like they're aware of the issue and taking steps to fix it. What else should they be focusing on to stay ahead of the curve?
Another major challenge for Barclays, and really for all banks, is navigating the ever-changing regulatory landscape. Financial regulations are constantly evolving, and banks need to be nimble and adaptable to stay compliant and avoid hefty fines.
That's true. Regulation can be a real headache, but it's also necessary to maintain stability and trust in the financial system. It's a delicate balancing act.
Exactly. Barclays needs to find that sweet spot between innovation and compliance. It's not easy, but it's essential for their long-term success.
It sounds like Barclays has a lot on their plate, but they also have a lot of potential. It's like they're juggling chainsaws while riding a unicycle. Impressive, but also a little bit terrifying.
That's a great way to put it. But, they've been around for a long time, and they've weathered plenty of storms. I have faith in their ability to adapt and innovate.
Me too. But let's not forget about the bigger picture here. We've talked about Barclays' focus on fintech and sustainable finance, but what about the ethical implications of these areas? As technology and finance become more intertwined, we need to make sure those advancements are being used responsibly.
Absolutely. It's not just about making money. It's about making money the right way.
Yeah.
We need to ask tough questions about data privacy, algorithmic bias, and the potential for these technologies to widen existing inequalities. It's like we're building a powerful engine, but we need to make sure it has strong brakes, too.
That's a great analogy. So as investors, how can we make sure our money is supporting companies that are not only profitable, but also ethical?
Do your research. Look beyond the financial statements and dig into a company's values and practices. Are they committed to sustainability? Are they treating their employees fairly? Are they using technology responsibly? These factors are becoming increasingly important for investors who want to align their portfolios with their values.
That's a great point. It's not just about maximizing returns anymore. It's about investing in companies that are making a positive impact on the world. So to wrap things up, what are your final takeaways for our listeners who might be considering investing in Barclays?
Well, Barclays is a company with a rich history, a global reach, and a strong track record of growth. They're making strategic moves in exciting areas like fintech and sustainable finance, which could position them well for the future. However, they also face challenges such as intense competition, evolving regulations, and the need to improve their customer service. It's not a slam dunk, but it's a company worth watching.
Sounds like investors need to do their homework and weigh the pros and cons carefully before making a decision. No impulsive buying here.
Exactly. Investing should be a thoughtful process. Don't just follow the hype. Understand the fundamentals and make decisions that align with your own risk tolerance and investment goals.
Great advice. Well, I think we've covered just about everything there is to know about Barclays. It's been a fascinating journey through their financials, their strategies, and their place in the ever-changing world of finance.
It really has. I always enjoy these conversations about companies. It's amazing how much you can learn about the world just by looking closely at one business.
That's the beauty of Investing Talk podcast. We get to explore all these different facets of the financial world and hopefully help our listeners become more informed and confident investors.
Yeah, I think we've done just that today. Thanks for having me.
It's always a pleasure to have you on the show. And to our listeners, thanks for tuning in. We hope you found this episode insightful and helpful as you navigate the exciting world of investing. Don't forget to subscribe to Investing Talk Podcast, share this episode with your friends, and leave us a comment. We love hearing from you. Until next time, happy investing.